Hi, I am Emily Hayes from Emily Hayes Homes. I'm a residential real estate, been in the industry since 2015, and I am super excited today to talk to you about the home buying process. I love education, and I'm here with my friend and lender, Ashley Shipley, who's going to tell you a little bit about her experience.
Like she said, my name's Ashley Shipley. I'm with the Shipley team at Veritas Funding, and I am the one that's going to help you get the money to buy your dream house. I'm the lender that helps you with the mortgage. Okay, so let's start at the top. So why buy a home in the first place, right? First and foremost, American dream, that pride of ownership, being able to do whatever you want to the house, that's amazing. Other things you may not think about though is the growth in equity of your property. So every month that you make a mortgage payment, you pay down a little bit of your principal balance. So there's some forced savings, more or less. But on the flip side, you also have the home going up in value called appreciation. And that difference is called equity. That's money, guys. That is funds that you can use in the future for additional purchases, investments, etc. Plus, owning a home tends to be 58% less expensive than renting. And the costs are much more predictable over time. Your payment is fixed typically. There are loan programs that differ, but typically your payment is fixed for the term of the loan, whereas rent goes up typically year over year. And then last but not least, depending on how you'd file your taxes, you'll want to talk to your CPA, but there could be some tax benefits to owning a home versus renting as well.
So, what are some things to consider when buying a home? The biggest thing that I always tell my clients is to pick a location that you are going to love. So that old phrase, location, 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 it is everything. A couple of things you definitely want to consider is buying on a busy road. That can definitely hurt your resale value. And buying in like a depressed area that has a lot of foreclosures. You just have to consider kind of what makes the most sense for your situation. But buy in an area that you actually really want to live. So if you decide you want to live in Sandy, Utah, but you buy in Lehi, Utah, I don't want to get a call in a year telling me that you're not happy with your house and you want to move back. So we definitely work with our clients to make sure we help you stay within that location. And sometimes, cost factor can make it so you can't afford that, but we can at least help you get into something that you're going to be happy with. Maintenance costs are another thing to consider. So when you buy a townhome or you buy a new construction home, there are some costs that are a little bit more mitigated. If you buy an older home, you have to look at things like roof condition, water heater, air conditioning, furnace, how much more life is left in those, and then factor in how much you're going to have to save every year to be able to replace those when the time comes. There are also considerations for potential appreciation. So I talked about potentially if you have a bunch of foreclosures in a neighborhood, well, if you can get a really good deal on it and you can hold it out, the market can really swing up. So we want to look at all factors and make sure that you're, comfortable and you're in a situation where you can have a house that's going to be appreciating. So one thing I tell people is don't buy the biggest house in the neighborhood. Sometimes you want to buy the smallest house with a lot of bigger houses around it. That's going to help keep your value up. You also want to think about future use. So do you want to have a mother-in-law apartment? Do you want to rent out, a portion of your house? Do you want to build a garage in the back? What things do you want to do with the homes? And make sure that, that's something that you can do on that piece of property. And then what's your income potential? So I talked a little bit about rental. So, can you rent your basement out for X amount of money that's going to cover a portion of your mortgage? Do you want to build an accessory dwelling unit to have your parents live in the backyard or rent that out to a renter? Just figure out what your potential income options are. A lot of people don't think about this, but you are buying a piece of property and that you want to find the highest and best use for that piece of property. So there could be a lot of options, and I'd love to discuss that with you.
When clients first come to me, a lot of them want to know if they're even ready to buy a home as a first-time home buyer. And I start with 3 very basic questions, and I want a yes to each of these questions to make sure that that potential buyer is ready to go. Those questions are, do you plan to live in the same spot for at least 2 years? In Utah, because appreciation or the growth in value in a home is so big and fast, homes grow in value quickly here. You want to be there at least 2 years in order to be able to sell and break even, make a little bit of money. Anything less than that, you risk not having enough money and having to pay to sell. We don't want that. Next, do you have stable and predictable income? If you just started a business, maybe not the right time to buy a house because you don't know what that income looks like, or you just switched to a full commission job, same thing. I'll help you navigate that, or any lender you work with should. Last but not least, is your credit score at least a 580 or higher? If it is lower than that, there may be a loan program for you, but rates and payments get significantly better at 580 and above. So if you answered yes to those 3 questions, you're likely in a good spot to buy a house.
So how do you buy a house? What are the steps that are involved in that? The first step is getting financing. So I always recommend someone talk to a great lender like Ashley.
Step one.
To make sure that you are in the financial position to be able to buy that house. A lot of people think that they aren't, but once they talk to a lender, they realize they can actually afford it. And sometimes their payments are lower than what they're renting for, and they're owning an asset that's building their wealth. We start looking for a house. So we figure out what all your specifications are, and then I'm going to start sending you homes that fit that criteria. We're going to go look at those homes, and we're going to find the one. Sometimes it can check off all the boxes, but you just don't feel right about it. So I always tell people, follow their instincts, go with what you feel is the right home for you, and don't convince yourself that it's the one just because it checks off all the boxes. Make sure that you really feel comfortable with it moving forward. The next thing you're going to do once we've found the one, you want to submit an offer. It has to be, The next step that we're going to do is submit an offer. Now, sometimes there are, probably heard about this, multiple offer situations, and that's where we go back to getting the financing order. We want to make sure that we have a really good package to deliver to them to tell them, hey, we have had someone review all of our documents, and now we're going to present this and say, and you know that we can actually afford to buy this home. So when we submit an offer, if there are multiple offers, there's a lot of different techniques that we use personally to help our clients get their offers accepted. Now, it doesn't always happen. Sometimes it ends up being that that isn't the one and we find a better one. But let's say we did get that offer under contract, or that offer accepted. Next, we're going to be completing your mortgage loan and inspections needed. So we're going to have Ashley take over that part of the mortgage loan process. I'm going to help you get all of your inspections completed, and we'll go, and then we are going to, at the very end, about 30 days later, you sign papers and then you own a home. So it's a pretty quick process, wouldn't you say?
Once you find the house, it's less than a month.
Yeah, it is a very quick process, and you do want people around you that help guide you through this, because this is a very brief overview, but you want someone that's going to really help you understand each step of the way.
Okay, the big bad one. Let's talk about credit. Credit doesn't need to be scary. It's just not something that's really trained or taught well, and this is something that I love, super crazy passionate about helping my clients with. I would love to talk to you personally. If you're not ready to have someone look at your credit, at least go get a free copy from somewhere like www.freecreditreport.com so you can see where you stand. You might not have any idea that something's reporting. And if your credit is less than stellar and you want to improve it on your own, call me. But on your own, there are better ways to handle a bad credit score to make it better. First and foremost, pay off any judgments or liens, like a tax lien for taxes that are past due. That's number one. Focus on getting that to zero. Next, you want to pay off past due accounts. These are accounts that are still open, but have a payment that's past due. Next, you're going to go to your charge-off account. A charge-off account is an account that is closed that still has a balance on it, like a credit card that the creditor closed down, but you still owe money to. You want to attack that third. Next, you're going to go after your collections, non-medical collections, like a Comcast collection, Verizon, etc. These collections are going to hurt your score when you pay them off. So if you can, negotiate on these. Some creditors will remove them from your credit with full payment. And if they won't, they'll let you pay a smaller portion. So either way, it's better. Next, you're going to pay down your high balance credit cards. You want everything to get under 50% of the limit. Then you want everything to get under 30% of the limit. And then you want everything to zero except for one credit card. I know that sounds crazy, but that is how credit works, and that's how you improve your score. Last but not least, medical collections. As a lender, we understand that typically people don't put themselves in poor health, and they didn't want that collection from a hospital. So the medical collections actually hurt your score the least, and there are multiple loan programs that don't even care that you have medical collections. So if you've been nervous or thinking that you can't qualify because of something that happened years ago or even last week that's now hurting your credit, you're probably wrong, especially if it's a medical collection. So again, I would love to help a professional that sees credit all day, every day. That's going to help you get approved for the best financing possible. So speaking of financing, Emily touched on this briefly, but when she submits an offer, she wants the offer to come with a pre-approval. So there are two terms, pre-qualification and pre-approval. Pre-qualification means that you've submitted an application, name, social, birthday, where you work, what assets you have in the bank, etc. I'm going to review that, and you and I are going to have a game plan to put together about what you can be approved for and close on a mortgage. Next, I'm going to collect documentation to prove the numbers that were submitted in the application. So we'll check with the employment, make sure everything's kosher, everything's good. Then we'll put that information through an automated underwriting system to generate and approve. That is a pre-approval. It means that the documentation has been reviewed and your loan is likely to close, and you are not going to default in the future based on the information submitted. That's the place you want to be before you step foot in a house. And that could be the difference of you going under contract or not.
And this is just so important because we have in the past taken people out who weren't pre-approved. They put in an offer. We had them do all the documentation right afterwards. And then they found out they actually didn't qualify for the home because there was, some discrepancies in their pay or things like that. So the strength of having this pre-approval is, I can't stress that enough in being able to get the house that you want. Ashley, I will even have her reach out to the seller to tell them this is a great buyer. They've submitted all their documentation, we verified employment, like those things as a seller's agent. When I'm on the other side, that is the things that help me want to pick that offer over another one, because I don't just want the highest price. I want an offer that's going to close, and that's super important.
We don't want to waste everyone's time.
Yeah, we don't want to waste people's time. So that's just so important to do this part up front before you really start looking for a home.
And there are thousands of loan guidelines. It's not your job to decipher all of that. That's your loan officer.
So why hire a real estate agent? One of the misconceptions with people hiring a real estate agent is that it's going to cost them a lot of money. I'm here to tell you that is not true. Buyer's agents are paid on the selling side. So there are not any fees involved. And it's super important to have your own representation. So we, as a buyer's agent, I would have your fiduciary responsibility to make sure that I'm doing everything in the transaction to help you. Now, if you're working with a seller's agent that's representing the selling side, it's very tricky to have both people's best interest in mind, and you really can't negotiate as aggressively. So I really recommend having your own buyer's agent that is really good, that you resonate with, and that is aggressive, and that is somebody that is representing just you. You want someone that is going to have education and experience. This is what a real estate agent can provide you. They understand the markets. They've been in it for a long time. They understand how to put an offer together. They understand what's normal, what's not, what things to look for to protect you in the transaction. And the contracts they're legally binding documents. So we want to make sure that all of the stuff that's in that contract is there to protect you.
Isn't there something crazy like 26 areas that you can negotiate?
Like that. Yeah, there's a ton of different areas that you can negotiate, and there's little tricks and tips and things that I always recommend for my clients to get a better deal. A real estate agent will help buffer between two parties. So if you already bought a home and you're watching this, you probably know the process is emotional.
little bit.
There's a lot of emotions. When I sold my house, I'm like, I wish I had an agent who could help buffer all these emotions right now. So we help take that emotional aspect out and help bring the deal together to make it actually go through and work for both sides. So that's super important part of why real estate agents are really important in the transaction. We have neighborhood knowledge. We understand what pricing should be, what's normal, what are good areas to buy in. We have a lot of expertise in that area. We understand pricing. We can look and see what things have sold for in a neighborhood and tell you what's like an actually good price for this home, what is the home actually valued at, not just what the seller has listed it for. We understand market conditions. How are things moving in the market? When's a good time to buy? We definitely have good experience in that, and it's super helpful to have an expert there guiding you through that. We have great professional networks. So if you need like a roofer, an HVAC person, somebody to help in that transaction to help do some work on the home, we can get all that done. I work with a team. I have a team that works, we all work together. Emily's Homes team. If there is something that needs to be checked out, we need to know, okay, the roof's kind of old. How long does it have left? Like, we've got people that are going out there getting those bids for you. You're not having to do anything. That's the kind of level of service you need in an agent because you don't have time to do that stuff, and we understand it. So you want someone with negotiating skills, somebody that can get the deal done, not only just at the front end, but the repairs part is really important too. So once you've done your inspections, you will negotiate repairs into the deal, and we are really, really good at that. And there's a lot of really good agents that are really, really good at making sure that you get those things in the contract that you need to make the deal work. And we handle all the paperwork and make sure that you're legally protected. And so there's a lot of things that go into this. It's not just finding the house. That sometimes can be the easy part. It's all the stuff that comes afterwards that can be really challenging, and you want to have somebody on your team guiding you through the process.
Absolutely. Okay, so let's talk about the cost of buying a home. So first off, huge misconception, you do not need 20% of the purchase price as a down payment. That's almost too much. Your money invested elsewhere is probably going to grow faster for you and grow your wealth bigger. But outside of just the down payment, there are additional costs that go into buying a home. Inspections. With Emily, I don't actually look at those as the lender, but they're extremely important. Then you have the appraisal. Then you have the appraisal. The lender orders that to ensure that you're not overpaying for the home that you're buying. Next, you have what's called prepaid costs, or costs that are going to build your escrow account. An escrow account is held by the servicer of your loan to pay property taxes and homeowners insurance once a year when they become due. And last but not least, you have true closing costs, and you'll hear that term. So closing costs include lender fees, credit fees, title fees, HOA fees if applicable, etc. And the total amount for this can be negotiated and paid for by the seller. It's all going to depend on the market condition, the price of the home, and what you can qualify for. And I can't just give an amount. I can't just say plan on an extra XYZ number, because it's typically a percentage of the home that you're buying. Someone buying a $200,000 condo typically will pay less than a $500,000 home. So I just want to bring and shed light to the fact that there's more than just the down payment, and don't be shocked when those costs come out to you.
Absolutely. Yeah, it's really important to plan for those and reiterate, you don't need 20% down. You can leverage your money because a mortgage is going to be the cheapest money you can possibly borrow.
Absolutely.
So what are inspections? What happens once you go under contract? So we have a 2-week, it's called a due diligence period. That is where you have to look in, make sure that the house you're buying isn't a piece of junk. You want to make sure that it's a good house, that it's in good shape, and that you're not gonna have to dump a bunch of money into it. So we first get your standard inspection. So your standard inspection is gonna cover things like, what is your electrical, your plumbing, anything that they can see Inside the walls is a little trickier, but they do test to make sure there's no leaks, that all the appliances are in good order. They check the roof. Our inspector goes into crawl spaces. He looks at everything and then comes up with about a 40 to 70 page report listing out every single little issue that you could possibly find with the house. They don't always catch everything, but they do a really good job at catching the major things. 3 other inspections we do recommend on top of that is a radon inspection. So radon is an odorless gas that comes up from the ground. You're actually breathing it in right now. But at high levels, it has been shown to cause cancer. And that is where the concern comes in. So you want to make sure that you do get that tested. If it comes back at a high level, then you can ask the seller to pay for what's called a radon mitigation system. And that is going to pull the radon out and shoot it up through your roof. So you won't have those concentrated high levels in your house.
No cancer.
No cancer, so that's a good thing. The next thing you want to inspect for is meth. So surprise, people in Utah sometimes smoke meth. It's a problem. But it is a sticky drug. So what that means is that it actually will stick on your walls and it can contaminate your house and stick on the walls up to 25 years. So Utah has a pretty strict standard. I think it's a national standard. If it's higher than a 1, once you test it, if it's higher than a 1, that's considered contaminated. What I've heard is that if you actually had a meth lab in your house, it would be like a 20/30. So really, like, health-wise, that's really concerning. But just the fact that it's over 1 means that the state could require you to actually decontaminate your house, which is a very expensive process. So we want to make sure the seller is actually the one decontaminating their house, not you. So if you don't get a meth inspection and you go down to sell it down the road, someone else inspects it, finds high levels, then you're responsible, which we want to avoid at all costs. Another one is molds. So if there's been any flooding in the house or things like that, or areas we have concerns over, we can hire someone to come in and test for molds. And then a sewage inspection is one thing people don't really think about that much. So there are sewer lines that go out from your house to the city where it connects with the city line, and you are responsible for that. The homeowner is responsible for that. So we recommend that you get a sewer scope to make sure that the sewer line is in good shape, that it's running properly, because it's a very, very expensive thing to fix and replace in the future. So you want to make sure that the homeowners have been taking care of it, and they haven't. I've seen weird stuff like bottles and rags, and I don't know how that stuff gets down there.
Even in new construction, I had somebody where the builder was throwing stuff down the pipes, and it clogged their sewer line. It's
kind of crazy. So even in a new construction home, I think it's a worthwhile inspection to get because of the cost can be so high to replace and fix those lines.
What happens when you're under contract? This means that you found the house, submitted the offer, and both parties agree to the offer. The first step will be the inspections. As a lender, I don't look at these inspections, but they're going to make sure that you're not buying a house that maybe has lipstick on a pig and is going to fall apart in the near future. In the meantime, I am going to work on ordering an appraisal and title work, meaning we want to make sure that there's nothing attached to the property or the seller that's going to prevent it from going to you, and that the home is worth what the contract states. And once we have all of this information back, everything's good, we don't need to renegotiate because of a low appraisal or anything like that, I will submit this to an underwriter who is a third party who's going to check all of my work and make sure that we meet the guidelines of the loan program. It's not scary. The underwriter will come back with what's called conditions, basically just questions that they have regarding the information submitted. You and I will work on gathering those conditions, submitting them back, and then my favorite thing happens, and that's your final approval or your clear to close. That means you're signed off, you're fully approved, we're ready to go to the title office and sign documents.
It's music to my ears. I love getting that call that we have a clear to close. It's fantastic.
So you just stretch your little fingers out and you go to the title office, you sign some documentation. The title company is going to send that to the county. The county will move the ownership from the seller to you. And that's called recording. When we get the news that the home is recorded, you get the keys, which I think is your favorite part.
That is my actual favorite part, is giving the keys over.
And you officially own a house.
Yep. So it's a very exciting day to celebrate.
Absolutely. And as far as how long all of that takes, Your pre-approval, pre-qualification can be in as little as a day. So that's your application, gathering basic documentation, making sure that you can close on the loan for the parameters that we set. Then you go to searching for the house. How long would you say that takes?
Typically about 1 to 3 months. So if you're in a contract on a lease, if you have a lease that it's going to end in November, I do recommend, starting to look in September, maybe even August, because it can take a few months to find what you want and you don't want to be rushed into that. But I've seen people find a house as soon as like the first house we go see, they're like, is this normal? I'm like, yeah, there's really no normal. It's all dependent on the market and what you're looking for, and I guess the universe too.
Right.
Bringing it in your path. But yeah, it's definitely, it can take, I would say, give yourself about 3 months head time.
What about contract negotiations?
What have you seen in the market right now? Usually about a couple days. Sometimes it takes longer. If there's multiple offers, they hold off until a certain time. But the sooner we can get an offer in, the better chances we have. And that's one thing we do is make sure our clients get in the same day to see a home.
That's not normal. Most agents don't do that. And one more reason to hire a real estate agent, especially one that works full time, is they can get you into that they can get you into that home the same day, which could equate to an offer the same day, which is the difference of you getting the house or not. And as far as the mortgage loan, industry standard, it really depends on whether you're with a bank or a credit union, a lender, a broker, all of those things are different. Industry standard is 30 days. Most contracts are written for 30 days. Yes. Shipley team can close a loan much quicker than that. And our average turn time is 18 to 21 days. So it depends on who you work with and the kind of loan program you're going with. But I mean, worst case, I'd say plan 30 days.
It's important to have it within that 30 days. So if you're working with a lender, you have to make sure that they can close in that 30 days. You also need to make sure you have their cell phone numbers too, because we do work a lot of nights and weekends, don't we?
Some don't, though.
I know.
A lot don't. And I think that that's a disservice because that's when people are looking at homes.
I agree. So. You need to have a team that's aggressive, that works full time, that knows what they're doing, and that's competent. And this is part of the reason we're doing this is because we just love educating, and we think it's important to share this information. Whether you use us or not, it doesn't matter. Whether you live in Utah or you're coming across this video and you live somewhere else, the principles are pretty much the same. But we are here to answer any questions you have. Feel free to drop us a note in the comments. Feel free to message us, email us. Our phone numbers are below, or they're at the end of this video.
They're somewhere.
Yeah, they're somewhere. But please let us know what we can do to help you, because we want to help educate. No pressure. We're super low pressure, but we just want to give you the information. So
it's a big deal, and you should feel comfortable. And I think that's the whole backing of this.
Yeah.
This isn't taught. This isn't something that's readily available.
No.
So we just took it on and said, let's go make it readily available. So we hope to hear from you soon. We hope that this video helped. And thank you so much for listening.
Thanks, guys.